Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I have a trade idea for you today. December 7th, 2023. Now, if you've looked at my last two trades, they both were in futures and futures options, bonds and oil. And as I told you before, I am the world's worst commodity trader, and I have lived up to that moniker. So I'm going back to basics. So what I do when I go on tilt is I go through my portfolio, my history on my portfolio, and I see what stocks I've done the best in. And this has been one of my best performers for 2023, and that's the reason why I'm going in there today. Let's take a look at what that is. It is Tesla. Tesla up $3.65 today. I've been playing this stock pretty much delta neutral. I've got a trade idea for today that really doesn't fit a lot of our parameters. You look at Tesla, you see the IV rank down here is 5.8% and going lower. It did try to muster a little bit of a rally here in the stock the last month or two, but it's been going sideways. There's been so much talk about Tesla, the Cybertruck. I said, you know what? I have no idea on direction. I have no idea on implied volatility. I do see that earnings are coming January 24th. After January expiration. So these options with 43 days shouldn't be affected by this January earnings call. All the news is out in Tesla to my eyes. Plus, there's so many eyes on this that I think the volatility is going to stay depressed in here at least until we get to earnings on January 24th. So what am I going to do? I'm going to play it omnidirectional. I'm going a little bit tighter than I usually like to do because the volatility is so low in here, but I'm going to go a little bit wider to make up for that. So I'm going to do a 1/2 ratio spread, but I'm going to do them both on both sides, calls and puts. Let's take a look at the strikes that I went to. I went down to the 210 put. You'll notice the 210 put has a delta of around 16. It's a standard deviation. I'm buying one of those, and I'm going to sell two of the 205 puts. Now that spread's trading for around $2.04 right now. I unclick this so that when the next time I click on an option, it won't come up as a 2 lot or a 1 lot, or it won't move these options. If I keep this one clicked and I start changing the quantity, then the quantity will change on this option. Anytime it's shaded in like this, it will change the quantity when you're going, because it's going to be a 4-legged spread. I'm going to put all 4 of these in at one time, all 4 of these legs in. It's actually 6 contracts. All right, so I'm buying one of the 210s, selling 2 of the 205s. You'll notice that the buying power difference here, or the buying power effect, is $8,400, a relatively high relatively high buying power trade in here. So if you're somebody that needs to use less buying power, this is probably not the trade for you. You'll notice that I am going a lot tighter. Usually I like to go wider with these spreads and collect around $1. I'm going much tighter to collect a higher credit, and I'm going to do it on both sides. So my credit for here is going to be quite large on that $8,400 in buying power. On a percentage basis, better than a lot of the other trades I've made on this podcast. Let's take a look at the call side. I'm going to buy one of the 285 calls. You'll notice that delta is approximately the same. That 16 delta. It says 17 right now with the stock up 324. And I'm going $5 wide again. I'm selling 2. You'll notice here that it's only graying out this area. So it's only going to change the quantity on this one that's grayed out here. I'm going to change the quantity to 2. And I actually collected $4.30 on this trade. I'm going to change the credit up here so that the numbers will fit for you. And you also could, work your orders yourself too. You don't have to always do it right at mid-price when the stock moves. It goes a little bit higher. I'm assuming you'll get filled a little bit better. If it goes a little bit lower, it'll probably get filled a little bit lower than where it is right now at $4.24. So I'm still using that same 85 $100 in buying power. My pop was around 90 before. It's now 80 because I have risk on both sides. You can see the break even is this large green bar in the middle. My break even is above $296.67, just under $300, because that's $285.90. I'm long one spread there, so I could, if the stock closed at $290, I could make another $500. So you could make $930 on this trade if the stock were to close right at $290. How likely is that? Not likely at all, probably less than a 1 or 2% probability of happening. So I cannot play for that. What I'm playing for is trying to collect this credit of $4.30, maybe managing the trade at $3.30 or $2.30. That's entirely up to you, depending on how Tesla behaves. On the put side, believe it or not, if the stock goes all the way down to 205, I could make that same $930. Why? Because I'll be long a 210, 205 put spread that will be worth $5 plus the $4.30 credit. Again, the probability of that happening, very small, 1-2%. The likelihood of me keeping this trade on that time, even smaller, less than 1%, because I would be out of this trade a lot sooner than that. How can I manage this trade? Well, I mean, the best way for you to manage a trade like this when it's going against you is to take off one of the sides and then sell. If the stock is going higher, then sell a put spread. Anything you want to do is reduce your delta. You'll notice here that the delta on this trade is -2.5. It's a very small delta trade. It has about $18, $17.90 in theta decay, so it is a heavy theta decay trade. I would prefer the volatility or IV rank to be a lot higher in Tesla, but it's not, and I can only trade what's there. Across the board, volatility is low. /VX making new lows today at 1360. So that's not helping the volatility of looking for trades with high implied volatility. That's not helping at all. I did think about making a trade in volatility today. I decided against it. I was going to buy volatility. Here, I'm hoping that Tesla continues to go sideways. If volatility were to go higher in Tesla, I would assume it would be to the upside in Tesla. Let's go back to that trade real quickly. You can see here that it moves around as the stock moves around, so be patient with your pricing here. It is a six contract trade, so you have to take that into consideration too, but you do get a good probability of profit of 80%. I was going to explain about how you would reduce your delta on a trade like this. Let's just assume that the delta on this trade goes from -2 to +20. Well, you could close your put spread. You're not really taking the profit on that side, although an accountant would tell you are, and then you would sell another put spread that has around 10 deltas in it to reduce your overall delta by 50%. All right, everybody, you know what I'm going to ask you for now. Please take, move, transfer, bring your account to Tasty Trade. That's the platform I showed you just a moment ago on this podcast. Help us keep the lights on here, and you get to take advantage of all the little perks that we have. And we're talking about money that we give you for moving, transferring, or bringing your account to Tasty Trade.